What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are looking at two trades that I recently opened up these positions within just the last 24 hours. One of them was yesterday, one of them was today. Now, the first trade is that I am short Tesla, and the second trade is that I am long oil. And before you get your political panties in a wad, these trades have nothing to do with each other. Neither of these trades have anything to do with anything political, any agenda, or any views on climate change or global warming or EV tech or fossil fuels or anything like that. These are simply just two trades, one of which I have a pretty strong bull case for, and one of which I have a pretty strong bear case for. So in this video, we're going to take a look at those, both the bear case for Tesla right now and the bullish case for oil. Ready? Let's dive in. All right, so first we are going to take a look at the bullish case for oil. And obviously, I'd like to preface this by saying I'm not a geologist, right? I'm not an engineer. I've never worked in the oil industry. So there's a lot of this that I'm relying on some things that some experts have said. And I'm going to link all of the sources below that I'm going to be referencing. I'm going to throw some charts up here on the screens. There's some great articles and videos that you can take a look at to make a more educated decision for yourself. So really, none of this is a new opinion. None of this is anything that I've developed on my own. I'll link all the sources that I've used for this research in the description below. We know that just like anything, the price of something is going to be determined by supply and demand, right? And so a lot of people who are saying and, kind of claiming that the oil production in the world is going to go down because we're slowly replacing global energy with green energy like solar and wind, they're projecting that the supply of oil dropping doesn't really matter that much. And quite frankly, a lot of people aren't even looking at the supply that much simply because the demand is dropping. And specifically, the demand has dropped over the last year due to a drastic decrease in things moving around, right? People and things going from place to place, shipping and airplanes and all of that has dropped a lot over the last year, obviously. Now, the thing about oil is that when demand drops like that, supply has to drop as well. I'm sure you all remember when the price of oil went negative last year. That was simply because there was so much oil being produced that nobody had anywhere to store all of the oil that was being produced. And like I'm sure you know, oil wells and oil production is not something like a light switch. You can't turn it on and off. Once you get an oil rig going, once you get an oil well going, it's either going and then if you shut it down, if it can ever come back online, it will take a very long time, many times upwards of a year. And most of the time when something gets shut down, it just doesn't ever get turned back on again. So obviously last year when we had this giant, supply overwhelming the demand and there was nowhere to store all the oil, a lot of production had to get shut down. But it wasn't just last year. In fact, supply has been dropping for years, and the rate at which oil production has been dropping has been increasing. For instance, 25% of the oil wells that existed before shale have completely shut down permanently, never to come back online. And it's just a historical fact that we have never seen a rate of decline in oil production like we're seeing today. As of right now, the annual rate of decline in production is 43% per year. What this means is that if we today activated every single rig in the entire world, it wouldn't make an ounce of difference in the amount of oil that we have, that is being produced compared to the demand for probably a year. Now, much of this is driven by the United States because over the last few decades, the United States has become much of a bigger player in the production of oil globally. And that's why things are changing so fast right now, because most of the decline in oil production is in the United States. Now, contrary to the belief at the Federal Reserve, you can't print your way out of every mess because you can't print oil. And this is a fascinating chart that I want you guys to see here. The rate of growth, the rate of GDP growth around the world is basically 100% correlated to energy consumption. Energy consumption, almost 100% equals GDP growth. And so it's really a geological fact right now that supply of oil is dropping, number one. demand is picking back up, but even if it doesn't pick back up, even if demand stays exactly where it's at right now, supply is dropping. But on top of that, it's most likely going to be met with a rise in demand. We are burning through global reserves, the global stocks of oil that we have right now at rates where that's making a lot of people surprised about it. So at the very least, I've painted a fairly conservative bullish case for oil right now, that at the very least, the price of oil is going to have to go up because the amount of available oil in the system is a lot less than the amount, and it's decreasing, is a lot less than the amount of oil that people and institutions and companies and governments want to buy. Now, just to address the green energy and renewable energy overtaking fossil fuels and that making all of this okay, and we can, not have as much oil being produced because it's all being replaced by green energy, there are a couple problems with that. Number one, most of those estimates are, the real estimates are, it's a couple decades out. And so this trade on oil going up, I'm looking at over this next year. Right? So the green energy has absolutely nothing to do with this. It's a problem right now that is creating green energy to take over the oil. It's just not possible within the time frame that we're looking at here. And number two, because you actually need fossil fuels to create the things that create the renewable energy, right? So you can't make solar panels right now without oil. And so ramping up solar panel production in order to create renewable energy, you still need a bunch of oil to be able to do that. And on top of that, the energy density and all that, it's, we've got a long way to go before any sort of renewable or green energy tech is able to significantly impact the amount of oil that's consumed on a global basis. And really the only long-term solution for that when you look at a renewable without a carbon footprint and from an energy density standpoint is nuclear. And you can see here on this chart that the United States isn't exactly focused on nuclear power right now. And there are a couple countries that are. So when you consider the fact that energy consumption is basically tied to GDP growth, there are a couple players in the world that are ahead of the United States in more ways than one, right? It's not just energy. We've talked about some of these other countries and how they're doing a lot better in a lot of key economic factors. This is definitely one of them. Energy is probably the biggest thing. It's what makes the world move, right? But I don't want to get too deep into the weeds on that one. Essentially, what we're looking at here is that there's a supply and demand mismatch. Even if demand stays where it's at, it probably won't. It's probably going to go up a lot. But even if demand stays where it's at, we're still going to be having a supply crunch because supply has been turned off and is declining in the US at a rate of 43% per year. So no matter which way you look at it, it looks like we've got a lot further up for oil to go. All right, and the next trade that we're going to be looking at is shorting Tesla. Now, before we jump in here, I want to preface this section with the fact that I love Tesla. I love Elon Musk. I think he's brilliant. I think he's going to go down in history as, the same way we look back at, Henry Ford or Thomas Edison. I just think what he's doing with all of his different companies is absolutely fantastic. I'm a fan. That being said, I'm not a fan of the share price of Tesla right now. So with Tesla, we need to look at a couple of things. Number one, what drove the stock price up to the insane prices, the insane valuation that it's at right now, arguably the most overvalued company in history. And then number two, we're going to look at why I think that the dynamics that drove the price up are done and that rally is over. And number three, we have to look at why I think that it just won't stay where it's at, that those dynamics will actually reverse and start to push the price down. So what drove it up? At the beginning, primarily, it was a short squeeze. Back pre-split when it was trading in between about $250 and $350 per share, it was one of, if not the most heavily shorted stock. And so there was a massive short interest. And we all know now, as after the whole thing with GameStop happened and some of the other companies like AMC and now Silver, we all know the bullish forces that can erupt on a stock that has a very high short interest. Because once it breaks and starts going up, everybody who's losing money has to start closing out their shorts, which is a purchase to close out a short, which is more buying pressure that drives the price up even higher. Now, not to pat myself on the back, but just for some credibility here so that you know that I'm not just looking at these things in hindsight, I knew that at that point there was a short squeeze driving the dynamic up, and as soon as the steam from that rally died out, it would reverse, and anybody who was able to hold on would pile back on with their shorts, double down so they could close out with a little bit less of a loss or maybe a little bit of a profit before rallying again. And so if you look back at my tweet history on February 5th, which was, almost a year ago, I'm 2020, not February 5th, a couple days ago. This was before the split. Tesla was trading at $780. And I said, I will switch back to being bullish on Tesla when it hits $400. Now, on a split adjusted basis, lo and behold, in just over 1 month, towards the middle of March, Tesla came back down and actually hit $350. Now, again, the chart you're looking at, there's been a split, and so it was a 5-for-1 split, hit 70, that's 350. Now, following that, once the dynamics then started to rally again, it had made a new bottom, which was its old high right at $350. Many of the shorts now were closing out for good. We started to see a gamma squeeze unfold. And again, after GameStop, everybody's familiar with what a gamma squeeze is. It's when everybody starts buying calls, and then the market makers have to hedge by buying the actual stock because they had to sell the calls to you when there's a big imbalance in a lot of buyers of calls coming in. That means there's nobody on the other side for the market makers to sell those calls to because everybody only wants to buy, but their job is to make a market, make sure there's liquidity. So they have to take the other side of that trade. They don't want to be left unhedged. So in order to hedge themselves, since they're selling you calls, they have to buy the stock. And so by a ton of money rushing in for months, just buying and buying and buying and buying and buying calls, that drove the price up. Simple gamma squeeze. Same thing that happened in GameStop. And then the final factor, especially over the last couple of months, that led to the price of Tesla rallying is the simple inclusion in the S&P 500, meaning that passive investing now had to start buying it. Now, if you haven't seen my video on passive investing and how it's basically just a scheme where everything goes up because money is going into it, which drives it up, which drives more money into it. And as soon as that dynamic reverses, this same exact force is pushing it up, will push back down. If you haven't seen that video, you can go watch that now because that explains more of the dynamics at play here. But passive investing, all of the index funds and everything that have just invested in the main companies that are a part of indexes had to start buying it. So obviously that's going to drive the price up. So those were the three forces that drove it basically from pre-split 350 to post-split about 800. Now, why do I think those forces are done pushing the price up? Number one, shorts are out. The short interest is only about 5% right now, which is nothing. So all of the short interest that was pushing that up from all the shorts closing out, that's gone. Number two, option positioning is a lot more flat now. There's not nearly as much imbalance in call buying versus call selling, put buying, put selling. The gamma squeeze is over, at least at this point it is. And finally, now passive is finally neutral here, especially as the price has started to flatten out here. At least at this point, passive is neutral. And obviously, if the price goes up, it's, passive is market cap weighted, adjusted for float. And so more money is going to have to rush into it if the price goes up. But at least at this point, that's flat. It's been added, it's been included, everybody's got what they need now. So why do I think that those dynamics are going to reverse and it's going to go back down? Well, number one, it's because those dynamics that push it up, those are very easily reversed. Like if everybody starts going in and buying out of the money puts right now, that will have the same effect that everybody going in and buying out of the money calls had on it earlier. It's a gamma squeeze that's just down instead of up. Because if you buy a bunch of puts and everybody's buying a bunch of puts and the market makers don't have anybody to sell those puts to, what they have to do in order to hedge themselves from selling you those puts is short the stock. They have to stay neutral. And so since that positioning is flat right now, it could go one of two ways, but because of the next couple of things, I think it's going to go down instead of up. Which brings me to the second reason why I believe it's going to go down instead of up, and that's simply valuation. It's arguably the most overvalued company in the world, in history maybe, and if you take a look at the valuation of, let's say, Apple compared to Tesla. Apple's a huge company, right? It's worth, about 1.8 trillion, I think, something around that right now in terms of its market cap. And if you gave Apple the same valuation that Tesla has right now, Apple would be worth about 70, these numbers might be old. It might be upwards of $80 trillion right now. Look, like I said at the beginning, I love Tesla. I know they've got a huge technological moat. I know most other car companies are at least 10 years behind where Tesla is in terms of software. I understand that. And I understand that they're doing a lot of other things. I understand the batteries and the solar and everything else that they're working on. Doesn't matter. You can include all of those. Wrap it up as a technology company, as an infrastructure company, as a utilities company, as a mobile, as a big, its own Uber. You can wrap everything up together, package it into one, and you still can't justify $800 per share right now, Tesla being worth $770 billion. You just can't do it. And finally, this is kind of an outlier, and props to Meet Kevin for throwing this bit of information out to the world here. But obviously, everybody knows Tesla just recently bought Bitcoin. Now, from an accounting perspective, the way that it looks is that if a company buys Bitcoin, and let's say it's at 45,000 where it buys, well, on the next time it reports earnings, if Bitcoin has dropped in value, Let's say it goes to 40,000 or 35,000 by the next time it reports. It has to report that as an expense. That means that if Bitcoin goes down and is worth less than it was per the time that that Tesla bought it, that is recorded as an expense, meaning that it's going to crush their earnings. So I'm not saying Bitcoin's going to go down, but this is kind of an outlier. This is something that could happen. Their earnings could get crushed just by Bitcoin going down. Now, the opposite happens, right? If it goes back up by the time their next earnings rolls around, then that will be reported as income. So then after that, it could, have a huge bullish impact on their share price. But anything over the price at which they bought it, they don't have to report as income. It's just compared to where they bought it. If it goes down, that's an expense. So that's an outlier. I'm not saying something like that is going to happen, but I'm saying something like that could happen. All right, let's wrap it up. Number one, I reserve the right to close out these trades at any time without telling you guys. And so yes, that means today I'm making this video after the market closed on Friday afternoon, and Monday morning, I might close out these trades if I change my mind or something, goes the other direction. I want to close out my risk and something in the chart, or, one or two or three other factors or anything comes in and says, hey, I changed my mind. I can do that. And I may or may not tell you guys about it because it may not be something that comes up in one of my next videos. So do your research, which brings me to number two, which is none of this is trading advice, obviously. Just sharing with you guys some positions that I've recently opened up. And finally, how did I make these trades? I made them with options. I really like options for things like this simply because it allows me to speculate on something with a very small amount of capital, of my overall portfolio. I can dedicate a very tiny percentage of my overall portfolio to a trade like this. And yes, I'm potentially going to lose everything that I put into it, but then there's an asymmetric upside to it. Right? I might lose this much, but I have this much to stand to gain if it goes my direction. If you'd like to learn how to use options, I've got both of my options course, beginners and advanced, linked in the description below. As always, I hope you enjoyed the video, and I do really appreciate you guys. Thanks so much for watching. Have a good day.